sort of. Okay, so let me quickly call on the next panel session. This is the panel session that will focus on blockchain and the emerging economy. It will look at all different areas, use cases, and the rest. So I'd like to call on the moderator of this panel session, Yinka Edu, partner UUBO. Please, a round of applause for her. There's lunch, don't worry. Just can we yeah, please, let's encourage them. Don't worry, this is and you know, if you guys make them angry, she can decide to make it longer. Make it like 3 o'clock. All right. Simon Chantry, CIO Bits. Simon, can you hear me? Ruth Iselema. I saw Ruth somewhere. Ruth Iselema, CEO Bitmama. And then Ray Yusuf, CEO Paxful. If you're online, if you can hear me, just say hello. Just say hello. Otherwise, Yinka and I will just handle this panel session now. All right, maybe we're having a bit of technical difficulties there, you know. Yeah. But while we wait for them to connect, for those online, I'll wait for them to connect. Okay. Yeah. All right. Awesome. So you have one. I mean, if you have one, enjoy with that one. So please, a round of applause. Can you hear us, Simon? Just, you know, say hello if you can hear us.
Hello, Simon.
You're muted if you're speaking. Yeah, okay, please, a round of applause for Ruth. That's the CEO of Big Mama. You can sit there. Yeah, you can sit there. Okay, I think we're good to go now. All right, over to you, Yinka. Thank you.
Thanks. Thanks, everyone. I think this might be the last session, so I hope we can keep your attention to the end. We're meant to have 4 speakers, on 4 panelists. Elizabeth Rosiello. Unfortunately, Elizabeth has lost her voice and so can't join us, which is a real loss because she has a lot to say on this subject. We have Ray Yusuf. Are you there, Ray? Okay. We have Ruth. Hi, Ruth. And I think we have Simon. Are you there, Simon? Can you hear us?
Good afternoon, Simon here. I can hear you loud and clear, yes.
Perfect, thanks. So I'm excited about this panel. I'm hoping that Ray will join us, but we'll get started. I'm excited about this panel because I think that when I talk to people, particularly people who are fintech cynics, the only thing I can get them excited about is the blockchain. That's the one thing that I think that I see common interest in. Everybody says, this is going to revolutionize everything. So we get a lot of support for that. So I'm excited for us to be talking about that here. I think also for us, we're talking about what it can do for the economy. I know a national pastime for us is looking at what it is that we have, what it is that we do better than other jurisdictions. So for example, people get excited. I hear people constantly talking about things like, you know what I can do with my bank in Nigeria, my cousin cannot do it with their bank in the UK, things like that. We get excited about those things. That's our national pastime. So I'm hoping that what the blockchain is going to mean is that we're going to, I know Nkem in his previous session had mentioned the industrial revolution and our progress. And I'm hoping that we're going to leapfrog ahead with the help of the blockchain. Sorry, just talking about Nkem again, actually. When Nkem mentioned that, made me feel old. And he said that young people are going to have 2 phones before using a tablet. So when I brought my tablet out, I was feeling old. I thought he'd left, but I see he's still here. Thanks for staying back. Okay, so if I can have Ruth maybe talk a little bit about who she is, what she does. I met Ruth a while back. She's a real entrepreneur. I met her a while back at the Venture Gardens in incubator event, which was a few years ago, where I was a mentor and she was one of the entrepreneurs there. And then when I met her later, I'm a lawyer. Sorry, I don't know if I mentioned that. I'm a lawyer at the law firm of Dodoma Sage, and I head the fintech team. When I met Ruth later, talking to her about how to provide legal support and that sort of thing, Ruth came back and told me that she can provide smart contracts and she herself can provide me with the support. So Ruth is the classic entrepreneur. Ruth, please tell us a little bit about what you do.
Can you hear me? Okay. Hello, everyone. So my name is Ruth, and I'm the CEO of Bitmama. So like she said, I came across the blockchain a while back, but when I heard about it the first time, I was like, what's this blockchain? I just kind of forgot about it. Then after a while, I kind of went back, read the whole blockchain white paper, and I was like, okay, this is interesting. And why it was interesting to me is because at first I was very, very interested in stocks. So when I was little, if I see my dad buying stocks, I'm like, where is my own? Like, you didn't buy stocks for me. So it means I won't be rich in future, because I'm always looking at all these Donald Trump and co and Warren Buffett. So I know that they made money via stocks. So I was like, okay, where's my own stocks? So finally he agreed one day and bought me First Bank stocks for me to play with and see how I can get into the stock market. But while he was doing that, I realized something. We needed to have a stockbroker. Stockbroker came, then we needed to pay the stockbroker. We still needed to pay him again to buy the stocks. And I think I was not too little, but I remember that experience very well. So getting to the blockchain, when it came out, it was easy for you to enter. There was no barrier of entry. I didn't need a stockbroker to buy me tokens or something that I would use to invest. So it was like, this is very interesting. So this is like stocks, but I can do it myself. So it's like DIY for stocks. So I was like, okay, this is very, very interesting. So that was where I picked interest. And a friend from Japan was the one that then kind of taught me the rest that I needed to know. And from there, I just picked up as my pastime. And before you know, it became my full time. Yeah.
Thanks for that. So Simon, can you hear me?
I can hear you, yeah.
Wonderful. So nice to meet you, Simon. I haven't actually met Simon, and this is my first contact with him, but I suspect that even if not a physical contact, I'm going to be, I'm looking at sort of 6 degrees of separation. There's going to be some contact with Simon in that we're all going to be using eNaira very soon. And BIT, if you don't know, is a company that is the technical support to the central bank in relation to the eNaira. So welcome, Simon. Maybe you can tell us a little bit about yourself.
Sure. Thank you so much for having me today. And I guess I share, somewhat similar background and inspiration to the story that we just heard, in the sense that as sort of, Bitcoin and cryptocurrency came on to the stage, or sort of has grown drastically over the last 10 years, it's offered different features, user experiences, configurations that I found to be somewhat attractive. I come from an engineering background, and I discovered sort of digital currencies back in 2012, and went down the rabbit hole of trying to understand how this technology would impact the financial system, and then more broadly, the economy of a particular country, and then more broadly, the global economy, and how countries would digitize their currencies. And then those currency networks would sort of interoperate with one another based on trade flows and other currency flows that we see. So that's sort of, my last 8 years in a nutshell, is basically being inspired by this open source development that we see in the form of blockchains and cryptocurrencies and digital currencies. And our responsibility as a firm BIT is taking that innovation that's happened over the last decade or so and applying it in a compliant manner to central bank digital currencies, and trying to bring as many of those features that that end users are clearly saying, these are valuable to us, we value these features, we want to be able to do more with our money, we want to be able to access it more easily and transact more easily, and have access to, for example, trading opportunities. Again, the story that we just heard. And so, yeah, that's a little background about me and sort of the way that I consider, the position that companies like Bit are in. It's really harnessing, capturing the value and the feature sets that have been sort of birthed by the open source community over the last decade, and then servicing central banks, because central banks are keenly interested in evolving the underlying technology of their currencies. And that's what we're here for.
Thanks. Thank you, Simon. Is Ray with us now? Okay. So I think I want to start, and I'll start with you. There's a lot of confusion and interesting confusion that occurred a couple of weeks ago, where people don't understand the difference between the blockchain and cryptocurrency. And I think one of the government agencies recently got that mixed up and caused a little bit of confusion. So can we start with that very briefly before we launch into other discussion?
Okay. So most times when people ask me what's the difference between blockchain and cryptocurrency, so I'm like, let's explain it like we're 5 years old. So you know how we have gold? Gold is under the ground, and the amount of gold that is under the ground, we don't know. God knows. We don't know, but let's assume we knew that there is a certain amount of gold in the ground. And for us to access that gold, we have to mine gold to get gold, right? So first of all, I'm going, just like the earth is immovable. The sky and the whole thing, those are the ones that rotate, but the ground itself is immovable. You can't change the ground. If this is a loamy soil, you can't change it to, what's the other type of soil? Clay soil or something. It's forever a loamy soil. Like this one now we are doing that. If this place is waterlogged, we put sand and want to change it to another terrain, it's not naturally possible. It's still a waterlogged area. So you have to mine to be able to get the diamond and the gold that is under the ground. So that's how I explain it like 5 years old. So now let's come to the blockchain. So the blockchain now is the ground. It's immovable, it's immutable. You can't change it. You can't move it from one place to the other. So it's a ledger. If I put something under that ground, it's forever there. And I cannot change it or change the terrain, but we know in terms of ground, it's kind of different, but I'm just trying to get an analogy for you. So you can't change the records on the blockchain. So that's the blockchain. So, but when it comes to cryptocurrencies now, for you to be able to put records on the blockchain, put transactions on the blockchain, you need to be able to mine transactions. The same way you're mining gold, diamond, silver. So now when you mine, the reward of you mining those transactions to say, we're all in this room, and let me say, I'm going to use this guy here, and he wants to say, oh, I got 70 over 100 in my exam. And we all say it's a lie, you got 50 over 100. He can't bribe all of us to say he got 70% in his exam. So we all agree that he got 50 over 100 in his exam. So that's where the immutability comes from, where we can't change it. And the whole thing is decentralized. We all don't know each other, but we all agree that this guy got 50 over 100 instead of 70 over 100. So now when you mine the blockchain, you're giving a reward, because I cannot just stay and be doing something just for doing something's sake. So when you mine, what you get is like a mathematical calculation, which is the cryptocurrency, which you have Bitcoin, Ethereum, and the rest of them. So that's the difference between the both of them.
Thank you. I don't know if you have anything to add to that, Simon.
I do. I guess it depends on how much time do you want to give me.
2 minutes.
Sure. So yeah, I see. Okay, I see each of these blockchain networks as that. They're networks, and it totally depends on the governance, the operation of those networks, as in the governance and the operations basically give it the qualities that they have. So in the case like Bitcoin, for example, which is arguably the most decentralized network in the world that has, very elegant sort of game theory woven into it to incentivize miners, as Rich mentioned, to actually participate and run specialized hardware to mine transactions and secure the network, and process transactions, or sort of mine new Bitcoin into existence, process transactions, secure the network. That's a really elegant decentralized structure for a cryptocurrency. And yes, it results in immutability. That immutability is still probabilistic, I should add. For those of you who understand the game theory behind mining, you'll understand that it's still probabilistic, as in you can still assign a dollar value to the cost to attack a network like Bitcoin, right? And it's in the tens of billions of dollars, I believe, at this point, on an ongoing basis. Now, these networks can be run in not a decentralized fashion, but in a distributed fashion, where you have known participants running nodes and operating these distributed networks. And there's a lot of other blockchain networks that take on that sort of structure. So you think of the likes of EOS, or I think Solana is like that as well, where there's known node operators who are contributing to the operation of the underlying blockchain transaction network. And that's how I think CBDCs will evolve, to sort of tie it back more to my work, is I think these networks will become distributed amongst a particular country, where you will have many nodes throughout a country operated by the central bank, by the financial institutions, perhaps by the regulators. Maybe there's new dedicated agencies or multinationals. But I think that one of the main innovations in blockchain technology is the ability to run these value transfer networks across a distributed number of nodes. Now, the decentralization piece is really interesting because it takes it across the entire globe. But when you get in the context of a country, I could see a scenario where each country is running a series of nodes across the whole country for their own currency, and then making that interoperable with the international networks. But I do see that Ray has joined us, so maybe we want to hear from Ray on the panel.
Hi, Ray. Thanks for joining.
Hey, everybody. Pleasure to be here.
Okay. So the other panelists have had a chance to introduce themselves. Would you like to do that? And then perhaps tell us a little bit about some of the use cases for the blockchain.
Hello, everyone. I'm Ray Youssef. I'm the CEO and co-founder of Paxful. I'm a immigrant, first-generation immigrant from Egypt to New York. My parents went to New York for the promise of a better life. And here I am looking to build a world where people won't have to move around to places that are foreign for chance of opportunity, because there'll be opportunity everywhere, because we'll all have honest money to give us prosperous lives. So Paxful is focused on the real use cases of Bitcoin, not speculation, but the real use cases of honest money every single day: payments, remittances, wealth preservation, and commerce. Some examples. So, well, first let's start with the problems. So, if, for example, if you're in Nigeria and you have a bank account and a bank card, you're limited to $100 a month. You can spend on that bank card every single month online. Imagine if all the plastic in your wallet was limited to $100 a month. There's not much you can really do like that, but that's the reality for many people. If you want to send money out of the country to buy something abroad and have it sent back home, whether you're importing a car or buying some goods online, it's extremely difficult, because often the central banks of these countries won't let people send wires out of the country. Why? Because they want to preserve the dollars and euros themselves. This makes things very difficult for people that want to import things into the country or buy things to run their business or do anything, honestly. And we all know about the problems with remittances. If you're in Berlin and you want to send money back home to Kenya, you're paying Western Union 20% for the honor of doing so, and it's a laborious process. Or you can use Bitcoin, And instead of paying 20%, you'll make plus 4% profit because of the arbitrage, the scarcity of Bitcoin in places like Kenya. People are willing to pay more. And the good thing is you'll be able to, instead of doing it by Western Union, you'll be able to do it via an M-Pesa, and it'll be instant. So that is the narrative that we are building, is that Bitcoin is not just about speculation. It's not just a store of value, but rather a means of exchange to break the bonds of financial apartheid that have been plaguing the global South and emerging world.
Thank you, Ray. A couple of years ago, I attended an event in South Africa, and I believe I heard about your Built by Bitcoin initiative. And I actually thought that was a really interesting interesting project, I guess. And I think it also shows about the fact that it's not just about speculation, just as you said. So could you tell us a little bit about that?
Built with Bitcoin is now 5 years old. It all started when I saw this video on Instagram about an orphanage in Afghanistan. I reached out to the fellow who was doing it, and we became good friends. And I decided, one day I heard about he was building a school in Rwanda and he was looking for donations. And I called him up again and I asked about the project, and I funded the project personally. And I went there to Rwanda, saw the school being built, and I said, hey, well, before that happened, we actually funded the school entirely with Bitcoin. So the school was funded with Bitcoin from the very beginning. All the donations were in Bitcoin. It was me that made the donations. And I went there to see the school being built. And when it was finally finished, I went there again. And now we have 2 schools in Rwanda. It's actually a campus. So the mission is to build 100 schools across Africa and the emerging world. I got this idea when I helped rebuild the first school, and that was about 2007 in New Orleans after Hurricane Katrina. I met these 5 Dominican nuns, and we helped rebuild the school. It was quite the adventure, but because we did that, the whole city came alive because of that one act. Because only then could the police and fire department return to the city, and that's what actually brings order to a place. All civilization starts under those 2 services, right? And because they had a place to put their children, they could come back, and then the whole city began to flourish. So that's what gave me the initial idea. So Build with Bitcoin is really about giving the people the tools to, it's almost like civilization building. It's like playing SimCity, the way I see it, but we can use real money, Bitcoin, to help build real structures in the communities that need it most. Right now, as it stands, I think 95% of all the donations actually go to helping people on the ground. Our admin costs are very, very low, and Bitcoin helps us do that. So we have 6 schools so far in Rwanda, Nigeria, and Kenya, and we plan to be increasing our pace of school building dramatically over the next year and a half. So we hope to reach our goal within 3 years. And that's what Built with Bitcoin is. It's building sustainable structures for people that need it most, focus on education.
Thank you. So I like the fact that it has this impact. So my next question really is that how does blockchain technology help sort of financial inclusion? Looking at what the impact might be in relation to that. I don't know who wants to take that. I can see Ruth is not looking at me, so I'm guessing she doesn't want to take it. Anybody want to take that question?
I'm happy to jump on it first.
Yeah, I think.
Go ahead, Ray, if you'd like to.
Yeah, so with this financial inclusion question, yeah, I think it can help a lot, especially if we're able to connect most of the blockchain protocol with maybe USSD payment. But I still believe education is still low. So if you're even talking about unbanked or financial inclusion, most of these people are not really literate, and you have to go through a lot of process of education. Even the educated people and literate people are still having a hard time understanding what the blockchain is. So most times, if this question should, or if it should actually work, is going to be that we're going to hide the technology behind the products for most of these users. But generally, this is not my field. Maybe you ask the inner guy.
Sure, I think when it comes to financial inclusion, obviously the base considerations are cost and access. So is it easy to access, and is it cheaper than what's currently out there? Also, you have to address the fact that some people do not want to be banked. They would prefer to consider to deal in cash. And yet, I think that as cost and access are solved, you're going to see more people transacting using digital currencies, whether they're blockchain based or not. Now, with blockchain based digital currencies, you have there certainly are more use cases that can be achieved. And we've seen that through DeFi. We've seen that through sort of the rise and explosion of DeFi over the last couple of years, where you can get all kinds of different financial products in a truly open and accessible way. And some of these financial products were only available, at sort of the higher level investment banking in sort of in the investment community. And now you can actually get those. Now, is that financial inclusion from a sense of, accessing some of the poorest amongst our societies? Perhaps not, but is it financial inclusion in the sense that you're augmenting the tool set that generally people have to participate in sort of more advanced financial systems? Then absolutely. I think in the case of eNaira, absolutely having more paths to transact and easier accessibility. So USSD, which is a feature that's coming, and really making it easy to access and for sure undercutting the costs that are currently out there is going to be absolutely crucial. That's basically what I typically boil it down to. And I think again on the crypto side, so with Bitcoin and whatnot, the use cases that Ray is talking about are particularly inspiring, because these take the cost and access piece one step further and also offer some investment opportunities that have obviously panned out fairly well in the Bitcoin space in particular thus far. If you look at the chart, most people are doing quite well who got into Bitcoin. Now, is that an indication of what will happen in the future? We're not sure, of course, but it certainly offers an additional sort of level of attraction. And because you just need an internet device, internet capable device to access it, it certainly is attractive. Again, I think that once you solve cost and access and continue to optimize for those things, then we'll reach the financial inclusion goals that we need. Also, interoperability, I think it goes without saying that any digital currency network, blockchain based or not, needs to have an augmented feature set, or a feature set that's attractive for people to use. Otherwise, again, what is the point? I think the path sort of goes, if you can give people who haven't had more powerful digital financial services, if you can give them access to those digital financial services, then they're more likely to participate in the economy. As they participate in the economy with these again, augmented feature sets for digital financial services, then they're going to increase their standard of living. And I think that is sort of the path of financial inclusion that we're trying to accomplish, certainly at BIT.
Understood, absolutely. So as you said, sort of cost and access, democratizing generally access to these types of services ultimately leads to greater financial inclusion. Ray, did you have anything to add, or shall I move on? So I will ask this because I have been asked it many times in relation to the eNaira. So I'll ask Simon that question. In relation to the eNaira, I get asked all the time. So if I can send money on my phone using USSD now, why do I need the eNaira?
Yeah, it's a great question. And I think when you look at CBDCs, when you look at the eNaira, you have to look at CBDCs in general. What's happening internationally with CBDCs? And this is a trend where, again, central banks around the world are looking to upgrade the technology behind their own currency. And they're looking to sort of participate more directly in the economy to provide, again, as low cost as possible, accessible sort of a payments network. So Nigeria is a tricky one for us because the payment system is already very advanced. There's a lot of different products that are in operation in Nigeria that offer great user experience and a lot of value. So our challenge in working with the CBN and other financial institutions in Nigeria is to just again further augment that feature set and then achieve some of the monetary policy goals that the central bank is trying to achieve as well. So these are tools for both the central bank and the financial system and the economy more broadly to achieve some of the larger sort of policy level goals that span years and years, right? And so this is, so I would say, it's important to look at it from a global perspective and understand the challenge that central banks are going through right now in designing, developing, deploying their digital currencies, because a lot of the benefits are going to be realized when each of these currencies are truly digitized and tokenized and then interoperable with one another. The payments use cases are I would say a little more regional dependent in the sense that if there are no obvious gaps, it'll be tricky to see how additional value will be created or offered to the general public, whether it's your retail consumers or enterprises or other firms. And yet again, that's part of our mission, is saying, okay, how can we fill the gaps that are out there, but then also how can we prepare Nigeria for an interconnected digital currency world, as most central banks are now digitizing their currency and then looking to interoperate. I hope that answers your question. Any other particular element I could zone in on?
So I actually think that's really interesting. It was something, it reminds me of something someone mentioned in the context of driverless cars. So they were saying, driverless cars are great. It's kind of a technology. It's a little bit cool. You sit at the back, etc. But where you really get the game changer is where most cars are driverless. And so therefore they can avoid each other. They can, they know when there's traffic in a particular area and divert and so on. And that's really going to be when we really see the impact. And I guess that's what you're saying, Simon, in relation to digital currency. The way we're really going to see that impact is where lots of other countries have digital currency and then the interrelationship there. Am I correct?
Yeah, I would say that's definitely part of it. And it's not to say that there aren't gaps and use cases that have yet to be fulfilled in countries like Nigeria. I do think that as we continue to roll out the e-Naira and more firms participate, that we're going to see some really interesting use cases come up. I think one of the ones that I'm particularly interested in is I guess it kind of coincides with an example that Ruth mentioned, and that is given the immutability of these networks, having sort of accountability and transparency mechanisms built in to different payment structures. So you think of public funding, for example, so a big infrastructure project or something like that. If we can have systems that have a little more accountability and transparency incorporated into some of these larger public payment scenarios, then again, it's a tool for sort of rooting out corruption and making sure that any money intended for a particular purpose is making its way to that end purpose. So that's, I would say that, yeah, yes, the driverless cars analogy is applicable, and I do think that we're going to see a lot of efficiencies gained as more CBDCs get interconnected. But I do also think that we're going to see a lot of valuable use cases in Nigeria that will ultimately add to GDP. I mean, that's our goal.
Thank you. Very interesting, Ruth. I know that one of the things, and I think the same for Ray, I know that sort of remittances, the use of cryptocurrency in the context of remittances is a big help. It's more cost effective, etc. And I think that Ray has sort of hinted at that. Is that still going to be the case with the e-Naira? Is there still going to be a case for that?
Okay. Yeah, I think it would be. But like he said, sorry, what's his name? Simon. Yeah. So like Simon said, we have to kind of wait for interoperability. So where Ghana Central Bank also has a CDC, or maybe the US, they also have, and you can exchange one of those CDC for another. But currently, I don't think they are moving from fiat to CDC right now, because that would also help if they are doing that, but it's currently not being done. Yeah.
And Ray, I think you also talked about the use of cryptocurrency in the context of remittances.
Yeah.
Yes,
Okay.
there's a lot to do there, but before we talk about remittances, we just need to look at the blockchain in the general like spectrum, the value that's we're able to offer now. And really it's in terms of third-party payments, because it's third-party payments that are driving all of this. Instead of me relying on Western Union to send money back home to my mother in Egypt, I can have someone else send the money to my mother from their, on their mobile wallet account to her mobile wallet account. It's peer-to-peer. That's the power of all of this. That's really the power of blockchain, is that it enables peer-to-peer payments. Bitcoin, the first words of the Bitcoin white paper were peer-to-peer electronic cash. That is the foundation and bedrock of everything. When you have this peer-to-peer electronic cash and you have this peer-to-peer network, then you can actually use that peer-to-peer electronic cash to make all the money in the world in whatever container it's in liquid. It doesn't matter if it's in a gift card, in a bank account, in a bundle of cash, in an online wallet account, a PayPal account, whatever. That's the beauty here. And this is actually, peer-to-peer payments is a 1,400-year-old struggle. It all started 1,400 years ago with another problem, when the Roman Empire forbid agency. And all the traders at the time that were running, transnational, international businesses, they looked around, they said, we can't do business if we don't have the power of agency to allow others to transact on our behalf, because we can't be everywhere at once, So what they did is they got together and they came up with a system called Hawala. Hawala exists to this day. It's an Arabic word for money transfer. And the reason Hawala worked is because there was a trust network in that initial community, and they were Muslims, because they had this very close-knit community and this religion that was based on an immutable ledger, the Quran in this case. They actually made that work, right? Someone could transact on someone else via another person, and money could get anywhere in the world. But now we have this other immutable ledger, and it's called the blockchain. And it forms the basis of trust for us to have this trustless peer-to-peer network. That is really the power here. We are coming full circle on a very old problem. And this problem is essentially what has kept the rest of the world from solving its own problems for them. Because we haven't been able to rely on our peers to help us with our money problems. We've had to go through these central institutions, and they're all controlled by a centralized structure that likes some people and hates other people. And that's why the world has been poor. That's all.
Thank you. So I was going to ask, what are the key impediments to the development of the use of the blockchain, particularly in Nigeria? I don't know if, I guess Ray has given us one theory on that. Ray, do you have anything else to add to that?
The key impediments are, as always, education, right? We need more education. The simplest things, for example, two-factor authentication. Most people are not aware of it. Most people don't use it, even when we try to make them aware of it. And it's a huge problem in all of Africa, because the truth is 99% of all African websites that Africans use on a daily basis have been hacked, and their passwords have been leaked. And unfortunately, most people use the same password they use for their email, they use for everywhere else, and they also use it for their online wallet, crypto accounts. So people are in danger, right? So besides those defensive issues, the biggest issue is just educating people about, number one, how the money system works. And once people understand how the money system works, they'll understand why it's so broken, and they'll see a world beyond that. And that was the biggest and best thing that Bitcoin ever gave me, was it gave me an understanding of what money actually is. Money is very simple. It's not work. It's not gold or silver or paper. It's work. It's human work containerized to transcend time and space. As long as you're able to do work, want to do work, then you should be rich. We have 600 million young people in Africa. That is a recipe for immense wealth. So getting that out there, changing the narrative so that Africans see themselves as, prosperous, wealthy, talented, as opposed to this dialogue of poverty, corruption, and disease that we get constantly from the Western media. Once we can flip that script around, we're going to unlock tremendous wealth in Africa and the entire global South. I see it as being the biggest problem, the second biggest problem, and the third biggest problem. So we got to get to work.
All right. For me, I see, what do you call it? Yeah, like Ray said, definitely education is still low. Like I said, but there's a good adoption rate in Nigeria, but globally, I think we still have less than 2% of world's population that know about crypto or blockchain or have anything to do with it. Maybe another impediment too is getting infrastructure developers. So when I mean infrastructure developers, like technical developers, it's like when I told you that we write smart contracts to, at least I'm happy now. A lot of people are now thinking of training. Recently too, we sponsored some developers to get to training, because when we started, we had only one smart contract developer. So I saw it that I'm not just going to bring out a smart contract developer from anywhere in the world, and maybe I couldn't afford someone in the US. So it was up to me to even teach my developers what the blockchain is and for them to grow with that. So yeah, that's one very big gap. So once we see that everybody understands what this technology is, what I can use it for, then we're going to see lots and lots of use cases springing up, even both in agriculture, manufacturing, supply chain, everywhere. But for now, people don't really understand it. But once they do, it's going to be game over. Yeah.
Thanks. Simon, did you have anything to add to that before we talk a little bit more about the use cases generally?
No, I really agree with the education piece, to be honest. I think we're at a really interesting time where internet native currencies are gaining ground, and it does beg the question of sort of the life cycle of money creation through to distribution and transaction in the economy. So I fully agree. Education, awareness, and training to be able to use these sorts of tools is a crucial element.
How easily do these sort of central bank digital currencies sit with cryptocurrencies? Are they?
I guess it depends on who you ask. Yeah. So look, the way that I see the relationship is sort of, I'll piggyback on what I just said. We're witnessing the introduction, the proliferation of internet native payment networks. And you could argue that Bitcoin has been the most successful internet native payment network to date, just given its market cap and its adoption internationally. If central banks have played a role in society for quite a long time to govern the money supply and foster economic stability, if not economic growth. And these institutions are still tasked with that challenge, even given the introduction of alternative currencies like a Bitcoin or Ethereum or other crypto currencies. So that again is why CBDCs are being introduced. And again, I'll sort of go back to what I said initially, in the sense that I think the CBDCs that are most successful, or that will be most successful in the world, will be the ones that either borrow from the feature sets that have been created in the open source community through crypto over the last decade. That I would say that's a crucial consideration for the design of CBDCs. And then secondly, being interoperable not only with one another and not only with the existing financial system and economy, but also with cryptocurrencies. And I think that CBDCs offer central banks a tool to better understand what's going on in crypto and Bitcoin, and potentially how to have sort of compliant trading services, virtual asset service provider licenses, these sorts of things. So I guess I just see it, I see it sort of pragmatically as this is, we're going through the age. I mean, it's incredible the evolution that's gone on over the last 10 years since the Bitcoin white paper was released, what that's done in Bitcoin, and then what that's done in crypto more broadly. Now you have an asset class that's worth over $3 trillion, which is just like a really incredible feat for a group of distributed open source developers. That's really what it boils down to at the end of the day. There are massive amounts and growing of software developers who contribute and collaborate in an open source manner to release software to the public. And so given that that's just a reality of the society that we live in, and I think it's another sort of phenomena that the internet has birthed itself. We're very fortunate to have lived through the age of the introduction of the internet and the proliferation of the internet itself. And it's just, I think it's sort of natural that you would see internet native payment networks or internet native value transfer networks spring up as like an offspring, of the internet itself. And so that's the task that central banks are sort of undertaking right now is how do they continue to achieve their mandate in a society that has internet native payment networks in a decentralized fashion like Bitcoin. I hope that answers your question. I know I hit a few points there.
Yes, no, it does, absolutely. Before I ask you all for sort of final comments, I just had one question in terms of a final question, I guess, which is about sort of when we talked about use cases, and other than sort of currency, we talk about non-fungible tokens, NFTs. I understand that the metaverse now, there's a blockchain that is dependent on the blockchain. So I just want to know all these new sort of trends and all these new things we're talking about outside of currencies. What any comments on that and what we should be expecting in Nigeria?
Yeah, so like you said, the NFTs, which are the non-fungible tokens, they are mainly tailored towards artists. And like you said, these are like manifestation of people now understanding what the blockchain can do. So I can use it in art. I can digitally sign my document, and like my university certificate, I can't forge it. If I sign it, it's my own. If I didn't go to university, I can't go and forge it and say I went to university. The record is somewhere. It's either with your university or it's somewhere on the blockchain. Someone is going to find it. So there are more use cases definitely coming up. We still have DeFi coming up, and I still say I see lots of disruption happening in the finance space. So sorry, but we're going to see a lot of uncoupling of the banks. So like products the banks currently offer, loans, mortgages, everything, savings. We're going to see a lot of uncoupling, and we're going to see like decentralized projects building on those platforms, but in a decentralized manner. I don't have to go to the bank anymore and say, I want 2 million naira, and they'll tell me to bring a picture of my dog, picture of this, picture of that. I can just stay there and just be on the blockchain, and someone is going to give me 2 million naira, whether I have collateralized tokens or I don't. So we're going to see various use cases springing up.
Thank you. Very, very exciting.
Yeah.
Simon?
Yeah, I think I've said, throughout the panel, just where I think we're going to see a lot of innovation, and that is just continuing to fill gaps, continuing to interconnect literally the world, and it's already being interconnected, but trimming down costs where there's excess cost. I do see a lot of there's always opportunities to optimize and make systems more efficient. And I think that's ultimately what we're going through at a high level.
Thanks. And Ray.
Yes, NFTs. I honestly don't know, guys. I don't know what the killer app of NFT is, but I'll tell you, if anyone's going to discover what the killer app of NFTs are, it's definitely going to be the Nigerian people. So I'd encourage Nigerian people to go all in on NFTs so you can come up with that secret sauce real quick for us. I know you're going to do it. So put another shout out in. It was the Nigerian people that personally showed me and everyone at my company what the killer app of Bitcoin was. This is back in 2015, and everyone's talking about Bitcoin as a store of value and a speculative instrument. There was Nigerian people that took this peer-to-peer electronic cash on this peer-to-peer marketplace, Paxful, and they hacked it in a good way to do every little thing they needed to solve every problem, big or small, that they had with money. So if anyone can find out the maximum value of something, it's the ingenious Nigerian people, and NFTs will be no different. So let's get at it.
Are you back, Ray?
I'm sorry, was that aimed at me? What did you say? I didn't hear you.
Maybe he's speaking actually.
I don't think they can hear us, right? There was a power outage. Can you hear us?
No, can you hear him? He's trying to say something.
Yeah.
Oh, I see. We're cut off, all right?
Yeah, I think we're good.
All right.
Yeah, I guess so.
I don't know if you can hear us, Simon.
hear
It
us?
looks like
Oh,
he can't hear us. He can't hear us.
I can't even say
We
anything.
can hear you.
Okay. And if I say it, you guys won't hear me.
They can hear us.
Oh, they can hear us?
Yes.
Yes.
Okay. All right. Oh, you can hear us. Oh, yeah, he's nodding. But we can't hear you.
No.
Testing.
Testing.